Hey guys, welcome back. So, no more quarantine hair. Okay, so I've seen a lot of other YouTubers talk about what stocks they're gonna buy if the stock market crashes, so I thought I'd add my own 2 cents to this as well. But before I begin though, let me give a small update on a stock that I own in my own portfolio personally, which is Hyliion. Now I'll leave a time code somewhere down below in case you want to skip to the meat and potatoes of today's video. I don't want to hear the update. But in case you haven't noticed, Hyliion has completed their merger with Tortoise Acquisition, and they changed their ticker to HYLN, and ever since the merger completed and the ticker change completed, the stock has done nothing but crash through the floor, right? So it's fallen from over $50 per share now down to around $30 per share. So it's pretty much lost like half its value. And really, as far as I'm aware, there's been no fundamental changes that has happened around the company. Basically, nothing has changed, right? So this massive sell-off recently is just the hype exiting the stock, in my opinion. Now I know a lot of people saw that initial run up from like $30 to $50, so they just saw that like hockey stick up, and they're just like going through the FOMO and the mentality that, you know, I gotta buy in, I gotta buy in. They see that like chart, right? So, you know, this is what I mean when I say that it's dangerous to be a day trader, and it's dangerous to just time the market, especially if you're a beginner in terms of stock market investing. Now I remember the days when the stock was going up by like double-digit percentages per day, and back then I didn't hear anyone else complaining about that, right? So now the stock is all of a sudden pulling back, and absolutely everyone is just panic selling. Well, not everyone, but a lot of people are panic selling, and I think a lot of people are just in this stock for the wrong reasons, right? A lot of people, as I said, they're just in this stock for a short-term trade, and they were just looking to make a quick buck. So meaning that, you know, if they expected the stock to skyrocket, obviously that's not sustainable, right? A stock can't just go up by double-digit percentages per day every single day. So eventually it becomes a point where it's unsustainable, and this is something that could happen, right? So, you know, if you're in the stock for the wrong reasons, you're going to be tempted to sell at this point if the stock just kind of crashes. So yeah, if you didn't do your homework and researching the company and whatnot, and you were in it for just like these short-term trades, of course you're going to panic if the stock crashes. So for me though, did I panic sell out of Hyliion? I think you guys can already guess the answer to that question, right? So let me allude to that answer by reiterating what I said earlier, which is as long-term investors, we should only sell stocks in 2 scenarios, which is 1, if something fundamental has changed about the company that influences your bullish thesis in a negative way, or 2, if the stock has just absolutely run up so much and it's become a hype stock and it's become super overvalued, which I would argue neither is the case here with Hyliion at this point. So no, I haven't sold a single share. So anyways, that's Hyliion. So, you know, for us longs, we just gotta hold, right? So I think that I still believe in Hyliion, and as I said, nothing has fundamentally changed about the company. So I think that in the future, you know, down the line, I'm talking about like 5 to 10 years down the line, I could easily see this stock being a $200 plus stock, right? But for now, you know, I'm just gonna have to be patient, right? And if you're still in this stock, if you're a shareholder, I would, you know, encourage you, I can't recommend, but I would encourage you to be kind of patient with this, because we knew from the very beginning that Hyliion is not going to generate meaningful revenue for a while, right? Till like 2022, pretty much. So yeah, we know for a while that it's going to be a highly speculative stock. So it's going to be volatile for the time being. There's nothing you can really do about it. And if you really believe in the company and you really want to hold long term, then you shouldn't be worried if the stock drops by like 10%, right? So you should maybe even think of it as a buying opportunity. Who knows? Again, not financial advice and not a recommendation. Make your own judgments. Don't just listen to some guy on YouTube. So without further ado, let's jump into today's stocks though. So I know a lot of you are expecting me to talk about Tesla, and I've already talked about Tesla a lot on this channel. So for the sake of not being repetitive, Tesla is not going to be one of the 3 stocks that I'm talking about today, even though it will be a stock that I will be buying if the stock market crashes. So consider it sort of as like a 4th bonus stock. But for this list, I try to pick stocks that I don't already own to kind of mix it up a bit. And these 3 stocks are all what I like to call high flyer stocks, meaning that they rarely ever dip. So, which is why I absolutely love this company, but I haven't bought into them because I've never really found a good entry point into any of these companies to get in. But what are these stocks though? First stock that I want to talk about is, of course, the almighty Apple. And what can I say about Apple? You guys know about Apple already, right? So this is a stock that I always wanted to own, but never really found a good entry point into it, and it rarely ever dips. If you just look at a chart of Apple, you can see that it's been pretty much going up in a straight line, minus the little hiccup back we had in March. And I'm sure that you've heard for years and years now that people have been complaining that Apple is stagnating, Apple's not innovating. But, say what you want, their sales have gone up and up, right? Their sales of popular products such as iPhones and iPads have smashed record after record. And I remember when the iPhone X first came out, people thought that Apple was absolutely insane for charging $1,000 for the latest phone. And people at the time were saying, oh, that's way too much. I'm never going to pay $1,000 for a phone. And guess what happened? Not only was the iPhone X super popular, it ended up pulling the rest of the competition up to that $1,000 price point. Well, pretty soon the likes of Samsung were increasing their prices and coming out with new flagship phones that were priced above the $1,000 mark. And even traditional brands like OnePlus that were previously considered sort of like a budget brand, well, they've been steadily increasing their prices with their latest flagship phones as well. It turns out that people are absolutely fine with paying $1,000 for a phone if it means that they can get the latest and greatest. And if you look at the market these days, if you just want a cutting edge flagship phone these days, they either start at above $1,000 or they're very close to that price range, right? So I think that $1,000 mark is pretty much here to stay. And recently we just got the confirmation that Apple will be holding their October event next week on Tuesday, during which they're expected to show off their latest iPhone 12 line of new phones, which you can bet will be very popular regardless of what kind of features they have, right? I mean, at this point, it's Apple. So, further pushing this growth into the future, we have things coming down the pipeline as well for Apple, including their transition into ARM-based Macs, which, if you don't know what that means, basically they're going to use the sort of iPad silicon, like the Apple chipset, on their Macs as well. So they have to kind of modify their operating system to achieve this because it's built on a different microchip architecture. But essentially, if you just think about the iPad, right? If you just look at how thin it is, and it's completely fanless as well, right? So if you can imagine sort of the same performance as like an iPad, if not even better, right, on a Mac, like on a laptop level performance, but it's completely fanless and it's just gonna be just as thin as an iPad. So it'll be absolutely amazing. And Apple's made some great innovations in terms of their own silicon chipsets with ARM-based architecture. So I'm very excited to see the new ARM-based Macs that will be coming out probably sometime in 2021. So lastly, Apple is driving their push into services as well. So namely, they're rolling out a new services bundle called Apple One, which includes things like Apple Music, Apple News, Apple TV Plus, and we'll have to see how well Apple can transition into being a software and services based company. It's kind of like the wild card right now, if you ask me. Certainly there's a lot of incentive for Apple to transition into becoming a software company because from a shareholder perspective and from a company's management perspective, software services are absolutely amazing because the revenue is consistent, right? So the margins are super high as well because it's very easily scalable, right? It costs Apple pretty much the same amount of money to sell 100 pieces of software than it does to sell 1,000,000 pieces of software, right? So of course it's more complicated than that because you would need more servers at some point to accommodate all these services. But the marginal cost of increasing, the variable cost of increasing per unit of selling a software service, it's much lower than the per unit cost of manufacturing a whole new iPad, right? If 1,000,000 people all wanted iPads, then you're gonna have to manufacture 1,000,000 iPads, and that's gonna cost a lot of material and a lot of money. But if 1,000,000 people wanted a piece of software, they could just issue 1,000,000 licenses and it wouldn't cost them that much extra compared to a few thousand licenses, right? So that's the beauty of software services, and I'm very excited to see what Apple can do by their transition into software services. So that's Apple. Apple stock is definitely near the very top of my shopping list if we do have a second stock market crash. Now, anyways, let's move on though. Moving on to stock number 2, and stock number 2 is McDonald's, ticker symbol MCD. And you guys know how much I love McDonald's, right? So maybe I'm a little biased here, but looking at the business model of McDonald's, I can tell you that I believe that this is a business model that will do well regardless of whether or not we enter into a prolonged recession. Now in the short term, because it is in the restaurant industry, if the Roni situation really flares up again, and let's just say we have to shut down again, it might hurt them a lot in the short term. But let me just say that I've been fairly impressed by McDonald's transition and adapting to the situation by leveraging technology. And what do I mean by that? Well, what I mean is that the McDonald's app actually works really well for making orders for curbside pickup or drive-thru, and they've also been pushing aggressively in partnering with delivery apps like Uber Eats and also other delivery apps to reach as many customers as possible. And I know you're sitting there thinking, well, how hard it is to make an app, right? How difficult can it be? Well, you'd be surprised. Let me tell you a little story. So the first time I tried to order from Tim Hortons using their app, let's just say it went less than smoothly. So when you order for curbside pickup on the Tim Hortons app, you have to do this weird thing where you have to pick a spot somewhere near the front of the store and park your car there and then describe your car. So, I'm not kidding you guys. You have to type in a short descriptor in the app. So for example, if I'm driving my Volkswagen Jetta, right, I type VW Jetta, like gray or whatever the color is, right? You can put the color in, and there's no drop down menus or anything. It's literally just a text box, and that means you can type in anything you want, right? That means the customer can type in whatever. So I can imagine some customers, they don't fill it in properly, and the clerk might have trouble finding your car as a result, right? So the customer could just type in, let's say something innocuous like Honda white, right? So, good luck finding the car. There's a million white Hondas in the world. So yeah, good luck finding it. And also, if you're a Tim Hortons employee, does this mean it's kind of your job to keep track of the makes and models of different car brands? Just, food for thought. As in, if you couldn't tell the difference between a Honda Civic and a Toyota Corolla, does this mean that you would automatically suck at your job now at being a worker at Tim Hortons delivering curbside, right? So it baffles me why Tim Hortons would do it this way. And also, this would be fine if this was the only problem, if this was the only issue. They would be small potatoes. But my main issue is that the app just, didn't work. As in, I placed my order, I waited 15 minutes in the car, and I described my car as detailedly as I can, right? I did it the proper way. And then I just waited in my car, and then 20 minutes passed, 15 to 20 minutes passed, and no one shows up, right? So I was like, what the heck? So then I go in and I ask them, and then they never got my order. And I paid for the order on the app already. So I paid, and they emailed me the receipt even. So, it kind of baffles me how I could pay for something and them having no record of me paying them. It would have been well within the rights of the store manager to be like, hey, we don't believe you or whatever because it's not on here, even though I already paid, right? But luckily they gave me my order anyways because I complained. But it's not a good experience when you order something and then you pay for it, and they would even send you a receipt for it, but you don't actually get the product, right? So yeah, sorry, I didn't mean to bash Tim Hortons, but my point is that making an app is actually harder than it looks, right? Okay, well, actually, let me correct that. So making an app is easy, but making an app that works well is very hard. So I'm glad that the McDonald's app pretty much works every time I use it, and it shows that the company is really ahead of the curve in terms of technology compared to the competition in terms of leveraging technology to help them adapt to new situations like the one that we're in right now. Not to mention that McDonald's was one of the first ones to introduce those self-ordering kiosk things. And it's funny how at first no one wanted to use them because people were not familiar with them. And then they literally got a McDonald's employee to kind of stand there and just direct people to the kiosk to let them make an order. And as dumb as that sounds, it actually worked because after a while, everyone uses the kiosk now, right? So I can tell you that most people, when they go to Tim Hortons these days, they automatically go to the kiosk first and self-order rather than go to the front desk. And people only use the front desk if there's a lineup at the kiosk. And as a validation that this is something that's really valuable, I've seen other competitors like Wendy's and Tim Hortons do it, but the problem is that with those places, it's very inconsistent. As in, some stores would have it and some stores just wouldn't have those at all. And then it's really sort of luck of the draw, and you don't know which stores will have the self-ordering kiosks and which stores wouldn't until you walk in. So with McDonald's, you pretty much have the self-ordering kiosks at every location, right? And they often have 3 or 4 versus with Wendy's and Tim Hortons, usually there's only 1 or 2. So, for McDonald's, say it with me, technological advantage. So yeah, looking at McDonald's stock though, you can see that McDonald's trades like a tech stock with a forward PE of almost 28 and a stock chart that's just been pretty much on a straight line increase since the March crash. And yeah, I know with the amount of money I spend at McDonald's, I should probably be a shareholder, right? I mean, I've just been waiting for a right time to buy McDonald's, but yeah, I just haven't found like a really big dip. So that's McDonald's. Last stock and number 3 on the list is Nvidia. So ticker symbol is NVDA. And you guys have probably heard of Nvidia, right? They're the guys that make GPUs, or at least that's mainly what they're known for. And you know, they also make other computer components as well that's needed in all sorts of applications, from machine learning to gaming to creative work. In fact, this video that you're watching right now was edited on a computer running a Nvidia GPU. So in regards to Nvidia, they're undoubtedly the industry leader in the GPU space right now. Just as anyone who games or anyone who does any sort of like, let's say, creative work or graphically intense work, they'll probably tell you that they're using a Nvidia graphics card. In fact, Nvidia has received quite a bit of criticism lately actually because of their RTX 3000 series graphics card, which are apparently too good. So apparently the performance of the RTX 3070 is about the same, or if not a little bit better than the RTX 2080 Ti, which, you know, for reference, is the highest grade consumer graphics card you could have gotten in the last gen, right? So in the 2000 series. So for reference, the RTX 3070 costs $700 less than the 2080 Ti, coming in at just $500 US compared to the 2080 Ti, which costs about $1,200 US. So basically anyone who bought a 2080 Ti is feeling kind of screwed right now, and sorry to you if you belong in that group. But from an investment point of view, I really do see this as an absolute win. And this is just because I see it as further validation that Nvidia is really pushing the envelope and continuing to innovate and put out some crazy products at amazing prices. And this is evidence that their lead on the rest of the market is only expanding instead of shrinking. And their lead on the market is going to continue to stay because it's going to be hard for other companies, right? Even big companies like AMD or Intel, it's going to be hard for them to catch up to Nvidia in this GPU space, at least in a significant way. And clearly Wall Street thinks so as well, because if you just look at a Nvidia stock chart, it has just absolutely skyrocketed. It has more than doubled since their lows back in March. And as a result, the valuation on it is very rich at the moment, and the stock is trading at a forward PE of around 50. And yeah, basically, as I said, this is a stock that I'll be watching very closely, and I'll probably nibble away at some shares at any type of major dip. Anyways, those are the 3 stocks I wanted to talk about today, so I'll end the video here. Be sure to hit the like button if you enjoyed the video, and consider subscribing if you like this series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye-bye.